Welcome to the Cryptosphere. This is Cryptogenic coming at you. Today is Thursday, March 2nd at 9:09 p.m. here in Northern California. In this video, we're going to talk about the Bitcoin price chart, the crypto market, and how low can we go. We all know that we've seen some market movement today, and there's been a drop on the price chart. The question is the bottom falling out? How low will we go? But before we get into that, I want to invite you to take a look at my Patreon at patreon.com/cryptogenic. I guarantee you that this is the best crypto Patreon experience that you're going to find on the market for the lowest price. I've just created a new tier, a basic tier that's $9 a month, and you get a 20% or 15% discount if you subscribe for the whole year. But you get the Cryptogenic portfolio with all of the take profit levels for all of the assets. You get consistent market analysis of the macro movements of the market. And the highest level now, the highest level that I have, the premium level is now $19 a month. And for $19 a month, you get all the trading calls, you get the weekly Zoom meeting, and all of my charts, everything. Nobody gives that in any crypto Patreon that I have seen. Nobody gives as much as I give for as cheap as I give it. The value is high, the cost is low. So I would invite you to check that out. And if I don't post a whole lot here on YouTube, it's because I post a whole lot there on my Patreon virtually daily. I've been in Hong Kong and Anaheim over the last week and a half, but I've still managed to post every day except the days where I was literally on a plane for 16 hours, 12 hours, and so forth. So check that out. All right, let's jump in here and let's take a look at Bitcoin price chart to get a feel for what's going on in the market. We'll start with the weekly chart. On the weekly chart, we're basically looking at a range that we're in. We broke above this level, and we hit resistance at $25,000, which is basically exactly what we expected. We talked about that in previous videos, that we were going to hit $25,000 and then there would be a correction. And what's happening is we're getting rejected there. It also concurs with the 200-week moving average, which is this yellow line. And we see the death cross of the 50-week moving average breaking beneath the 200-week moving average. So we hit this line of resistance, and now we're coming back down to the bottom of this range, it looks like. Of course, we don't have to go all the way to the bottom of the range. And in fact, we're going to talk about what it would look like for us to stop short of the range or break through the range and keep going. What would we be looking for to indicate that the bottom is going to fall out from beneath it? On the daily chart, what we can see is that we were in this ascending channel going up, the depth of which is about 12.92%. So if we close beneath this ascending channel, this bespeaks the coming of lower levels to come. We're now breaking down beneath this level of support, this line of support in this channel. However, as we can see, we've got 18 hours and 47 minutes left in this daily candle. And if we break back above this line and close above that line, this will be nothing more than a wick. We've wicked beneath this line before, so that would not be a problem at all. And matter of fact, we could break out here and take another stab trying to break the $25,000 level. I'll tell you in advance that what I foresee potentially is that what we're building is a head and shoulders here. And if this is a shoulder, a head, another shoulder, and then we come down, then a rejection, we come down. That's a possibility. We may find support at this line. We may break beneath the line. We simply are going to watch this as a possibility. But once more, watch to the end of this video, and I'm going to give you a key that I believe is absolutely essential for reading the market and determining if we're going to see a bigger breakdown or not, okay? There's a reason why we start from the weekly and then go to the daily and then the 4-hour and then the 1-hour chart, and I'm going to put all this together for us. On the 4-hour chart, you see that we were in this channel for some time, basically. Really started back on February 15th, so we've been in this channel for a little bit more than 2 weeks. We hit the top of it, came and hit the bottom of it, and that was support. I put this chart in my Patreon 5 or 6 days ago and showed this support if we broke down, and sure enough, we broke down beneath the line, and we got support here. So for now, we've got support. Looks like we got a bounce in the RSI on the 4-hour chart, which is very hopeful. What I would imagine is that if we are truly in recovery here, we're going to retest the top of this line. And if we break back into this pattern, the pattern will continue. But if we get rejected at this line, then we've got lower levels to go. Okay? So we're going to watch that. Now, finally, the 1-hour chart. Here's what I see on the 1-hour chart. Well, back here we had a descending narrowing wedge. We broke bearish out of it, and we hit the measured objective right on the nose. I mean, look at that. The depth of this was 3.86%. You go down 3.86% and bam, there's your target. And then we started making higher highs here. So we had like this uptrend, this kind of uptrend, this upward channel. But the RSI topped out early on and started making lower highs. And whenever you start seeing bearish divergence in the RSI is telegraphing a breakdown to come. And sure enough, we got this breakdown in a single hour. We had this bearish engulfing candle on the 1-hour chart, the depth of which is 6.4%, 6.14 or 6.05% basically. Basically 6% we lost in a single candle. And now we're consolidating down in that range. And if we actually looked at a smaller time frame, we could actually see what kind of consolidation pattern we're saying. And well, that could be a bear flag. It's basically a symmetric triangle. We won't try to figure that out at this time. Yeah, somewhat of a bear flag. Looks like it could be preparing to break down even further. We will watch it. But here's what I look for. On the 1-hour chart, if you're a trader, 1 hour or smaller time frames, when the RSI bottoms out, it's a buy. So we're in an active trade right now with Solana. Solana followed Bitcoin on this. The RSI bottomed out on the 1-hour chart and bounced. When I saw the bounce in the oversold position on the RSI on the 1-hour chart, I entered a long position, somewhere down towards the end of this. Okay? Then I went back and took a look at the 4-hour chart and saw that we're in the oversold position on the 4-hour chart as well. Or at least we were hitting that oversold position. So there's a concurrence between where the RSI is on the 1-hour chart and the 4-hour chart. And when I took a look at the daily chart, I noticed that the daily chart is right in the middle, maybe lower middle, but still middle. Which means that if you look at the daily chart, we still could have quite a ways to go down before we actually bottom out. So when you're talking about the difference between a long-term buy and a short-term buy, when the RSI bottoms out on the daily, 4-hour, and the 1-hour at the same time, when they're all in the oversold position, that's a buy. Now, when I saw that we were super oversold here on the 1-hour, I thought the likelihood of us crashing down beneath this level very far is very low. Now, it is possible that we get bullish divergence here. It is possible that we recover for a few hours and then crash down again and hit a lower level. Okay? Where do I have? Do I have any lines of where we could go? Well, yes, I do. Which chart should we look at? Well, number one, we've got this line here at 21.2771. Or, yeah, 21.271, sorry. So to get there, that's another 5%, right? So we could see another 5% drop from where we are on the 1-hour chart. That's like, seems cataclysmic, doesn't it? All right, so we could put this line of support right over here on the 1 hour chart and say, if we drop, that could catch us, and we could go all the way down there. Now, what would that look like? Well, the RSI would need to, recover for a little while, maybe come up and test this line, this moving average, right around here somewhere, and then boom, then it could drop again. What I would be looking for, if the RSI does something like this and then drops again, I'd be looking for the RSI to make a higher low. If the RSI makes a higher low when the price makes a lower low, that's called bullish divergence. Buying that low is not certain, but there's a high probability that once you see that bullish divergence in the RSI, it increases the probability that this buy is a good buy. Okay. Now, of course, it doesn't guarantee, because the RSI could always come down and make a lower low again. It's all possible, and we don't ever want to, think we got it figured out and we know exactly what's going to do, because that's exactly how you get wrecked. But yeah, when I looked at the RSI, it's bottomed out on the 1 hour, it's bottomed out and bounced on the 4 hour. That said to me that we've got a nice little long position here. And if I've set my stop loss, now that we've got a buy position and we're in a long position, and we got a little bit of profit, I set the stop loss just under the profit and then set a buy at a lower level. In case we get this kind of crash happening, we'll just set another long position at a lower level and buy in again. No harm, no foul. But at any rate, I do see the upward trajectory here as being temporary, because I think we could get a retest of this area here. I think we could meander into this area here and then drop again, maybe even drop all the way down to here, or we could find support somewhere in the middle here. But at any rate, I don't think we've seen the bottom. What I'll be looking for is for the daily chart to bottom out. And when we're in the oversold position on the daily chart, on the 4 hour chart, and on the 1 hour chart, I believe that will be the place to set an epic long position. And of course, even then, we can get the bullish divergence scenario and it could drop lower. But either way, beginning to set long positions when we're in the oversold position, and we get a bounce in the oversold position on the daily chart, the 4 hour chart, and the 1 hour chart concurrently, that will be a highly, highly profitable position to take. All right, folks, thanks so much for watching. Remember, this is not financial advice. I'm not a financial advisor. Every video that I make, every position and opinion that I state is nothing more than an opinion, and an incomplete one at that. So please don't take anything I say as gospel. Do your own research, make your own adult decisions using your own adult brain. Remember to check out my Patreon, patreon.com/cryptogenic. Hit the like button, subscribe to this channel if you haven't done so already, and leave me a comment letting me know what you think of the content. Thanks so much for watching. Remember, above all, to sleep in peace every night, wake in joy every morning, and walk in love every day. This is Cryptogenic, signing out.